Jonathan, to get us started, give me two truths and a lie, please.
All right. So I climbed to the top of Mount Rainier.
Oh,
Okay. I was a collegiate distance swimmer, and there are times when it makes sense to intentionally increase the amount of tax you pay.
all right.
Let's see.
These are good. Let's see, indeed. Climb to the top of Mount Rainier. All right, maybe. Collegiate swimmer, but not just a swimmer, Jonathan, a distance
Yes,
swimmer.
let's be clear.
And
Yes.
that, right, yeah, it's important to be accurate with our words. And there's times when it makes sense to pay more in taxes.
Yep.
Okay, all right.
I don't
Well,
know.
these
Maybe.
are excellent. I believe that you climbed to the top of the mountain, but who knows? Hmm. I'm gonna guess that you are a collegiate swimmer, but not a distance swimmer.
That is actually true. I was a collegiate
Ah,
distance swimmer.
okay, all
This
right,
one's a little tricky. I didn't quite make it to the top of Mount Rainier.
all
So
right.
that was a tough one. So
Yeah, yeah, you got me. So you attempted and
I
just
did,
didn't.
yeah. I made it like 75% of the way there. It
Okay.
was really cool experience, awesome. Guides were amazing. But what I didn't realize at the time is that, early in the climbing season, the route's pretty straightforward. You just sort of, the snow's there, there's ice, you kind of just go up the mountain. As you get into the fall, later in the summer, crevasses have opened up.
Mm.
There's, these big holes in the mountain. And so you've got to navigate all the way up and then down and around. So the route was about double what it normally is. And so I got about 75% of the way there and I said, I think I'm good. I've seen enough turned around.
Yeah, I've
So
seen way too many movies.
yep, exactly. So, and the other thing you think you forget about sometimes is you make it to the top, but you also got to come all the way back down the same route. So, anyways, yeah, almost made it to the top. One day I'll get back out there, but very cool experience.
Just a little earlier in the season, maybe.
Yeah, that's right. Yeah, any of your listeners out there, go in the spring. That's ideal.
Nice. Does the snow ever disappear?
No, I don't think so. No, but it does warm up a little bit. So
Got it. All right. And collegiate distance swimmer. That's awesome. You thought to yourself, being in the water is great. It'd be even better, be in the
yeah,
water for a long time.
yeah. I wouldn't say it's fun, but yeah, that's what I did. So
And sometimes it does make sense to pay more in taxes.
it does, yeah. And that is a lot of what I want to talk about today is, there are times when you may want to pay more tax, so you pay less tax later in life. So, hopefully we'll be able to talk a little more about that. But yes, I think that is true.
Beautiful. All right. Well, you got me. Congratulations. I
Yes.
hope you're happy with yourself, Jonathan. So, in terms of taxes and financial planning, what is top of mind for you?
Yeah, I mean, I want to talk a little bit about how to pay less in income tax. I think that's probably universally a favorable topic for most people. Um, I think most people still view taxes as the dreaded, once a year event. You go and file your return. You either do it yourself or work with a CPA. You're never really sure how much you're going to owe. Maybe you get a refund, and then you're always looking back, looking in the past at what happened in the previous year. And so, there's not much you can do at that point to, change anything that's already happened in the previous year. And so, on the flip side of that, if you can be thoughtful in the actual year before, in the tax year, about doing a little bit of planning, putting a little bit of thought into, um, what options are out there. And I'd love to talk a little bit about, those various options. I think over a long period of time, it's a material difference in the amount of income tax someone can pay. And the way we view it is it's not the amount of tax you pay right this year. It's the amount of tax you pay over your lifetime is what's important. So that's what is sort of top of mind. And I think about my own career. I started in tax compliance intentionally. I got some great advice early on in my career that said, understanding income taxes can make you a better advisor. And so, I'm so glad I got that advice because what I found is, and what we found here at Wealth Crossing is taxes are literally involved in all sorts of different aspects of someone's financial life. They touch everything. Um, and as the tax code gets bigger and bigger, it's touching more and more things. So, um, you know, that, that path into, tax in the beginning led me to an advisor, led me to where I am now, Wealth Crossing. And, Wealth Crossing we just rebranded from SBK Financial to Wealth Crossing just a few months ago. Really exciting. Um, and our focus has always been since the start 20 years ago, tax planning in everything we do for a client. And so we've been really intentional about that, strategic, forward looking. And so yeah, just love to sort of dig into what that means and some of the ideas
Yeah,
that some of the listeners might be able to use.
it's perfect. It's interesting that we do fall into that trap of just thinking about taxes the one time a year, and it's like, oh my gosh, I'm terrified of what this is going to look like, so I'm not going to really look very close. I'm just going to look
Yep.
quick and like, oh, I owe $1,000, or I've got $1,000 coming to me, or whatever.
Yeah.
And what strange behavior, because I bet there's a lot of people out there who are looking to get good deals and to save 5% or 10%, or I can get half off. Yet we're not thinking about that in terms of our taxes. And when you look at that over the course of a lifetime, if you could pay 5%, 10%, 20% less in taxes, what a massive amount of money that is.
Yeah. Absolutely. I mean, if you think about it, tax is probably the biggest expense you pay over your lifetime,
Hmm.
or not one of the biggest expenses over your lifetime. So, yeah, you're exactly right. Saving 5%, 10% on, what is likely close to one of your biggest expenses over your lifetime, that can have a huge impact. It's more money into the portfolio, more money to spend on things you want to do. And so, yeah, you're exactly right.
And is this reserved just for high income earners? Is it reserved for business owners? Is this available to anybody?
Yeah, I mean, of course, we really view like three different buckets. There's your salary W-2 earner, and that includes the wide spectrum of income ranges. And that's most of the population. And then you've got your, business owners, self-employed. So, um, they run a business, right? So they're self-employed, and there are a number of different ways that's structured. And then you have your retiree, so someone who's retired. Those are they all have very different tax planning needs and opportunities. Um, and so really depending on where you fall in the bucket, there can be, different ideas there.
I imagine. So what are we
Yeah.
going to focus on today? Because it's a big world out there.
It is a big world. Yeah. Maybe I think what would be most valuable for maybe your listeners is talking through each of those buckets, and throwing a few ideas out there. Some of the things, we like to do, of course, like you said, I mean, the tax code shoes, there are a ton of planning opportunities. When we think about a W-2 earner, as someone who's salaried, there's your typical, contributing to retirement accounts. Likely you have a 401k. You've got your IRA accounts you can contribute to. More often than not, you'd be surprised, you know, people may think they're maxing those out, but they're not. And so it's important to sort of double check that you're maxing out your 401k. And then do you do a Roth contribution or a pre-tax contribution, just your regular traditional? And that is really a question of what is my tax rate today, this year, and what do I expect it to be in the future? So maybe you're someone who believes tax rates will go up in the future. Maybe in your career, you expect your income to continue to go up to be in a higher tax bracket. So many times it can make sense to do a Roth early on and then pre-tax later in life. It's all about what is the tax rate you pay going into the account versus what is the tax rate you pay coming out. You want a lower tax. Yeah, you want a lower tax. You want a higher tax when you contribute because you want to defer that income, and you want to pay less tax when it comes out. So um, again, that's a big part of the W-2 earner. Um, and there are things called the backdoor Roth IRA, mega backdoor Roth IRA, which is related to the 401k. I'm not going to go into the details about how that works, but if you're a high income earner and you're young, these are great strategies to get money into a Roth IRA that you otherwise would not be eligible for. So I encourage your listeners, to go do a little research on that. That can be a great strategy.
That is, I wonder, it's probably not knowable what percentage of people actually thought through the decision to do Roth versus traditional when it comes to qualified plans. Um, I just wonder.
Yeah, I think the default is typically pre-tax, right? But again, that goes into you can put a little bit of extra thought during the year into, well, what tax bracket might I be in? Where might I be in the future? And you can make it's a switch. It's an easy switch. And again, that goes back. You may pay a little more tax this year to pay less tax over your lifetime. So yeah.
Does it make sense if I'm not paying a lot of income tax right now? Does it make any sense at all to do pre-tax or tax deferred into an IRA?
Um,
It's
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 better than
hard.
not doing it,
It's
but
it, it's
you
it's
know.
it's it's hard to ask tax questions like that live,
Yeah,
but it just
I think if you're in a low income year, and there are a lot of reasons you might be in especially low income year. Maybe, you know, you just had a child and maybe one spouse is staying at home for a few years. Um, maybe you lost a job and it's going to be a lower income year. You may want to intentionally create some income, and that can be, an IRA to Roth conversion. So maybe you're in the 10-12% bracket. Uh, 401k to pre-tax to raw. So maybe you take some capital gains intentionally in that year. So yeah, definitely. I mean, if you're in a low income year, we view that there's tax planning opportunities in the low income years and the high income years. So, yep.
got it. Always more things to consider.
Yeah.
Okay, nice.
So, yeah, and I think, if you're, business owner, self-employed, that's a whole different ball game. I mean, uh, there are lots more retirement plan opportunities available to you, and it gets a lot more complex. Um, so I think that's really important, especially if you've got high income, so, business that you're getting a lot of cash flow from. You're in a top bracket, really stacking a couple retirement plans and deferring that income can make a lot of sense. Entity structure is important. So thinking through an S corp versus an LLC. There are a couple different ways to structure those that can make more sense. And then always the trying to maximize the QBI deduction, which is the qualified business income deduction. That's a new thing from the Trump tax cuts in 2017. So yeah, just a few things to think about for business owners.
So you can go beyond just making the standard whatever it is for any given year $25,000 contribution into a qualified plan. I'm thinking I own the company. I have the 401k for my employees, but I also put in the maximum contribution. But there's additional monies that I could or contributions above and beyond that with some tax planning into some different kinds of retirement plans that would allow me, the owner, to put more money in.
Yeah, you- maybe you have an individual, maybe you're self-employed, you have an individual 401k plan. You are the employer and the employee. So you can do both employer contribution, employee contribution. Um, and the max is, I don't have the exact number in front of me. The max is north of, 80,000, for those plans. there are things like cash balance, pension plans. You can stack on top of that, and then a few others. So, yeah, definitely. If you've got a lot of excess cash flow, you're in the top bracket, those can make a lot of sense.
And I've made a joke that it's a big world out there, but I mean the tax code is voluminous and it's there's opportunities to do this kind of planning if you're open to it and willing to go down that road, and it can make a
Yeah.
big difference. So I appreciate that. What about for folks who are no longer earning earned income, but so they're in retirement?
Oh, yeah. I mean, this is our favorite group to do tax planning for. I mean, there are so many different levers, and there's also a ton of little traps in retirement that um, you can get caught up in if you're not being thoughtful throughout the year. So one great example is, when you turn 65, you get on Medicare. There's something called the IRMA, income related monthly adjustment to your Medicare premiums, and that's based on income. So if you go $1, they have different brackets. Go $1 over the next bracket, your premiums increase for both you and your spouse for that year. And for Medicare, they look back 2 years at the 2 years tax return. So you don't even see the increase till 2 years later. So it can be a surprise, sort of like, why did there's not much you can do 2 years later. So, um, I that is probably the biggest surprise we see with a lot of, retirees who come to us is, um, 2 years later, I got this increase of $5,000 a year, and I don't know why. You just go a little bit over those brackets. So, things like Medicare brackets, if you're charitable, there's a ton of opportunities with qualified charitable distributions out of the IRA. Um, if you're getting ready to retire, you can bunch a bunch of charitable contributions into a single year in your highest earning year right before you retire.
Hmm.
Spread that out with a donor advised fund. And, the probably where we see the most benefit for retirees is thinking through, where do I get my cash from which account? So, right, you have your paycheck. That's how you're getting cash. All of a sudden you need to pay yourself. And now you have maybe you've done some really good planning. You've got a nice big Roth IRA. You've got the traditional IRA, 401k, maybe you have a taxable account. So all those have different tax implications. So when you pull, um, thinking through, how much do I pull from this account this year, versus how much do I pull from the pre-tax versus the Roth? There are a lot of different strategies, but I think being, again, thoughtful in the year, the actual tax year, doing a little bit of projection, a little bit of planning each year can make a big difference over a lifetime.
So obviously, there's a scale to all of this, but
Yeah.
what is a little bit? Are we talking about
Yeah.
50 hours of planning? Are we talking 10 minutes?
Well, I think if you're a DIY, um, and you know, there are some Excels out there uh, that you can sort of input information to. There's some consumer focused projection software out there. I think planning out how much cash you need throughout the year, that's an exercise in and of itself. Your spending, and then planning where you're going to get that from, and then sort of looking at your other income sources, so having a good sense of that, and then comparing that to the tax bracket. So you may say, all right, I've got 50,000 already coming in, maybe through a pension. I need another 50,000 more. We're at 100,000, and so I run the projections, and you know, well, maybe I only want to have 75,000 of taxable income this year. So I'm going to pull 25,000 from the IRA, 25,000 from the Roth instead. I think that's probably 3 or 4 hours. Maybe you got to do some research. You know, of course, if you're working with a CPA or working with an advisor, who does tax planning, they'll do that on your behalf. And so, yeah, it's really kind of dependent on the knowledge base and how much you're willing to learn on on the tax code. So,
Got it. And when somebody engages with you, what does that process typically look like?
yeah, so many of our clients, well, for all of our clients, we do tax projections throughout the year. And right, like we talked about the three different buckets. I mean, they all have very different tax planning needs. And so, we think about a retiree or someone getting ready to retire, doing multi-year projections and sort of looking at what are we, one, what tax brackets are we projecting you'll be in based on your existing income sources? And then in the actual year, right, what I just talked about, where do we go get money from for this cash? And so for every client, we're doing that tax projection, and we're being thoughtful about where we're pulling from, um, and what investments we're selling, and the impact of that. So yeah, very very dependent on the client type and what their needs are, but everyone gets a projection throughout the year.
I love it. So it's not a massive investment of time to potentially be saving, like we talked about at the top, just
Yeah,
an enormous sum of money. And all of us are interested in getting a good deal and
I
paying
think
the
so.
correct amount of taxes,
Yes,
but just not overpaying. So
that's right.
I get it. Well, Jonathan, you've given us a lot, but we're ready for that difference making tip. What do you have for us?
Yeah. Yeah, I mean, I'm just going to reiterate, so being intentional, thoughtful on uh, what's going to impact your tax return throughout the year, and really thinking through not just this year, but the next couple of years and really a longer term. What's my tax situation going to be? Can again make a huge impact on what eventually ends up in the portfolio and your checking account, um, and reduce the total tax you pay over your lifetime. So whether you're W-2, you have lots of different opportunities with deferrals and the 401k, um, backdoor Roth, mega backdoor Roth. If you're a business owner, it's what type of retirement plans are available to you? What's the entity structure? Is that structured correctly? And then if you're retired, I mean, there's a laundry list of items. If you're charitable, there's a few planning ideas. Be careful of the Medicare brackets. Be looking at that. And then again, being thoughtful on your withdrawal strategy, and uh, really trying to focus on what's best. So
Well, I think that is great stuff. That definitely gets it. Come on. The
nice.
best advertisement for doing tax planning with you, Jonathan, was saying pay attention to the Medicare brackets. My eyes glossed over. I'm like, there's no way I'm going to do that. I need professional help.
Well, I don't think you're 65 yet, so it's not on your
Oh, right. Okay.
yeah.
I gotta.
So unless there's something I don't know.
It's a good
Yeah.
point. No,
Yeah.
yes, I'm actually 200 years old. Well, Jonathan, thank you so much for coming on. Where can people learn more about you and how can they engage with you?
Yeah. We're Wealth Crossing. Our website's www.wealth-crossing.com. We work with retirees, those getting ready for retirement, um, you know, executives who are, business leaders, self-employed. We do a lot of good work on the tax planning side and on, again, just being a comprehensive wealth management, personal CFO for those people. So, um, if you don't want to do it yourself, we are doing it for our clients. So, yeah, wealth-crossing.com.
Love it. Well, if you enjoyed as much as I did, show Jonathan your appreciation. Share today's show with a friend who also appreciates good ideas and people who don't want to pay more than they ought to be paying in taxes over the course of this year and their lifetime. So go to wealth-crossing.com and you can learn more about Jonathan and the firm and see if there's opportunities for you to work together. Thanks again, Jonathan.
Thanks, George.
Finally, friendly reminder, there's never going to be anybody more interested in your financial success than you are. So act accordingly.